It's a very complicated and worrying picture. So what does it all really mean? Well, joining me is Ken Cordafor, personal finance expert from the Humble Penny. You're so welcome to The Context. Thanks for joining us. Talk us through what this means for students and why it's going up at such, I suppose, roller coaster rate up and down. Pretty difficult, I think, for people to figure out how much they might actually owe.
Yes, so it's good to mention that the actual student loan system is pretty complicated for a lot of people. It's quite difficult to understand how it all works. Now, the reason why we're seeing the rise in the rates effective from September this year is because of the retail price index. So inflation's been going up, and the RPI is one measure of inflation, the other being the consumer price index, the CPI. The RPI is usually at a higher rate than the CPI. And for some students, for some graduates, their rate of interest that's charged is based on a calculation being the RPI rate plus 3%. And as at the time of speaking to you, the RPI rate stands at 9% and the CPI rate stands at 7%. So when you add 9% plus the additional 3%, we get that 12% headline number that you'd mentioned earlier. So there's that intervening period between September and February next year where the cap kicks in, where potentially for high earning graduates, quite a lot of them stand to incur more in interest rather on their student loans.
So with that, I'm just thinking of a student. Talk us through perhaps whether it will be something that's going to take them much longer to pay off, or that each installment will be much more expensive. I'm also thinking about, the jobs that they might get after they graduate. Of course, they may be, very worried about exactly what they can afford.
Yeah, so it's worth mentioning that when students have student loans, they actually don't start repaying their student loans until they earn up to beyond a particular threshold, which is around £27,295. So for the people who earn beyond that, there's a calculation which is 9% of anything above that amount is what you then start to repay on an annual basis and so on. So the more you earn, the more you essentially pay. And if you don't earn above that threshold, you don't pay anything back. The reason why this particular piece of development really matters is that with such a high rate of interest, given the times we're in with rising costs and rising fuel costs and travel costs and food prices and so on, it comes at a particularly bad time for a lot of people, because for a lot of students and graduates and so on, it means essentially that a much higher level of interest is added to their already existing debt. Now, it's worth mentioning that only a fraction of the people with student loan debt actually get to repay their student loans in full over their careers, for example, or over their working life. So it's really the people who are the higher earners, people who are most likely to pay off their student loans over the 30-year period, after which student loans get wiped off effectively. Those people are the people who are likely to be hit the hardest because they are paying off their student loans in full, potentially, over that period of time.
I understand. Well, let me broaden this also, because of course it brings up questions about the future of education in the UK. It talks about perhaps also access to education. Katie, how are you seeing this? And I suppose really putting it in that broader context of the cost of living in the future years.
I mean, so on cost of living, I think that you combine what's just been laid out in terms of the rise in interest on tuition fees with the fact that we have a national insurance hike, which hits the working age, working people. And I think you can start to see how I think the Conservative government can be quite easily criticised for not offering enough to younger voters and actually those who are going out to work, whereas probably the older groups who are more asset rich. For example, if you look at national insurance, that is to fund social care. Now, eventually that will help someone who is, graduating today, but that's a long way off if that policy is still in place. So I think there's an intergenerational issue. And then I think in terms of the government's education plans, we know that this government is trying to make some people think twice about going to university and wants to crack down on Mickey Mouse degrees. Now, where that was intentional, they might also be putting some people off just in terms of the sheer price that you might end up paying once you've gone.
Yes, let me turn to you, Stephanie. You know, this is a conversation that's taking place in the UK very much about young people, what they'll be able to afford. Will they ever be able to get on the housing ladder? A lot of people staying at home, living with their parents for much longer than they would like to. Is that a conversation that's also taking place among young people? As we've seen, of course, talking last night, I think 8.5% was the rate of inflation in the US.
It's a conversation that is happening in households across our country for a number of reasons. This latest generation is really asking the question, is this education really worth it? Mm-hmm. Am I getting a return on my investment? They've seen their parents be dragged down with the weight of student loan debt. The parents of this generation have been impacted by student loan debt, I think, more than any other generation. And so they're asking those questions. A lot of private institutions, people are taking a pass at them and looking at more local schools or more inexpensive schools because they don't want their future to be compromised by the weight of student loans.
It's an interesting one. Coming back to you, Ken, and I suppose this will just briefly also play into housing decisions or renting decisions for those young people as they graduate and get their first jobs.
Yes, absolutely. Because if we think more generally about what the student loans represent for people, for a lot of people, it was a way for them to go to university. But at the same time, for the ones who are ambitious, the ones who want to get good paying jobs, it actually means that at some point in the future, those student loans and those higher interest rates has been charged on those student loans effectively have to be paid back at some point in the future. And with everything else that's going on, no one really knows where inflation will be, years down the line. The cost of living, as things stand at the moment, is impacting a lot of people and will likely continue to impact people down the line when students come to start to get jobs and get into the working environment and that sort of thing.
Ken, thanks so much for joining us, taking a look at some of those figures out of the UK.